Mining giant BHP Billiton has suffered a massive hit to its bottom line, falling to an 11-year low. The company's full-year profit almost halved to $1.9 billion, a drop of 86% on the previous year. Speaking in London tonight, boss Andrew Mackenzie was upbeat about Beijing's reform agenda and the long-term growth prospects there.
As we look at things today, there are signs that the Chinese economy has begun to bottom out, and that the second half will be stronger than the first.
Well, the miner says it remains committed to its progressive dividend, with its full-year dividend increasing by 2% to 124 US cents per share. And fund manager Roger Montgomery is joining me in the studio now. And Roger, I just want to pick up on what Andrew Mackenzie said just then. He's talking about the Chinese economy has begun to bottom out and that the second half will be stronger than the first.
Well, you would expect that. Never ask a barber whether you need a haircut. The economy in China is slowing down at a rapid rate of knots. There's a structural problem in the banking system. There's imbalance in the economy. So essentially what's happened, of course, is that China has suppressed consumption. And what they've done is they've done that to fund loans for banks, to fund infrastructure projects, for example. Yep. Now, 70% of their economic growth came from fixed asset investment. That's now got to be rebalanced. The only way you can do that is to actually slow down your fixed asset investment massively, and we're seeing an oversupply of steel as a result, and a reduction in demand of iron ore and coal, and lift the consumer. Now, it's not easy to do when they've just taken a hit on their speculative property investments that have fallen 8%. The stock market has wiped out more than the tech wreck and the GFC in the United States combined, and 67% of retail speculators had no high school education and were borrowing money.
Well, you and I have been talking about this, and you've been warning about this for some time. I know, but we have had another 8% sell-off in the Shanghai today.
Yes.
As a retail investor in China, how have speculators fared, do you think, retail
Terribly.
investors?
Many of them have been wiped out. They were trading on margin. And so this is a terrible time to try and use consumption growth to offset declines in fixed asset investment. And all it means, and if you actually have a look at non-performing loans of the major banks in China, it actually looks quite stable. But they have something called special mention loans. Now, special mention loans are in arrears, but not to the same degree as bad loans, and they've gone up fivefold since financial year 11. So there's a fivefold increase from 0.71% to over 3% now, and it continues to go up. And that's because, quite simply, the corporate sector is so indebted and the local government vehicles are so indebted, and they're not getting a return on the investments that they've made to pay the debts. So there's refinancing going on, and this is a structural problem, and slow growth in China is guaranteed.
So when these bubbles do, I mean, do you see these stock market falls and property market falls as a busting of bubbles? Or
absolutely.
Or just a correction of some sort?
Historically, whenever we've seen a bubble burst, and it was a stock market bubble that burst, whenever you see that happen over the next 3 years, you see negative growth printed almost without exception around the world. So this simultaneous decline in the property market and in the stock market could actually wipe 2 or 3 or even 4% off GDP. And if you don't believe the numbers that are being printed at the moment for GDP, you believe that they're lower, and we do believe that they're lower, you could see GDP growth in China of only 1%. So I hear Australia's largest iron ore producer saying it's starting to look better. I doubt that very much.
Well, you say GDP growth of 1% is a sort of downside scenario. Senior business leaders today were talking up Australia's resilience to China. I think Mike Smith from ANZ said China has huge potential. Should we be worried? I don't think so. Alan Joyce at Qantas is only thinking about his low oil prices, and other comments like a correction based on a China slowdown. It's nothing more than that.
Well, oil prices are here to stay, but look, it's too simplistic to just say there's 1.5 billion people in China and look, it's all going to be fine. It's slowing down at a rapid rate of knots, and the fact remains that it's not going to recover anytime soon.
Roger Montgomery, it's very interesting. We'll watch this for the rest of the week and see if it goes any lower there. Thank you very much for joining us.
It's a pleasure.